Good afternoon. This is Dr. Ken Long from Tortoise Capital Management with a quick case study on regression line crossover, pattern number 4, trade frame. We're going to use pattern number 4, a lazy W after a successful regression line crossover, to front run my favorite pattern, which is the sideways quiet channel, pattern 5. And with that lazy W pattern, pattern 4, we're going to frame that trade in both directions. And you'll see why in a minute. So what we have here is TNA, that's the triple leveraged Russell small cap, and that morning from 9 o'clock onward we cashed a nice trade, couple R, on this move outside of the river, which then fell into a regression line crossover outside the river, and it found its way back to the Bollinger Band mean. It didn't find support there. It actually fell outside of the river into the floodplain on the other side, and it found support. So all along this path here, rather than taking the trade with an RLCO, which in retrospect looks like an obvious and an easy trade, I generally, after I cash a couple R here, I like to wait to see if I can get some resumption of that initial primary trend, and that's the direction I'm stalking, and I'm trying to stay in line with the direction that the Bollinger Band mean or the river is flowing. So I want to trade in the side of the primary trend of the day. You can see shortly hereafter the dragon rolls over and then starts getting flat in here. Now so I didn't take the short side trade. I'm looking for chances to get long in here, and was not able to until I saw this developing at this blue line is where I'm stalking and making my entry. And so what I notice here is a pattern 4 trade starting to develop. It finds support here outside the river in the floodplain, and then it moves up to the edge of the river and finds support inside here with the dragon and that Bollinger Band 2. I discount these long tails when I'm looking for support patterns. I take the real price to be this Bollinger Band 2 or the dragon itself. And now we see a regression line crossover outside the river. It's legit to take this as an entry right here at 8208 as a RLCO outside the river. I was waiting to see a little more confirmation because it had failed all the way down through here, that I wanted to see a little bit more. Could you take this as a pattern 1? Absolutely. It's a regression line crossover outside the river, entering when the price enters the river. You can actually see this now as a support and a lower support, so or support and then a higher support, I should say. And so that's a legitimate entry there. However, I waited. It comes back and finds support here at the Bollinger Band mean. And now I really look at this as a third way to find support. Now my actual entry was in the lower end of this bar right here, because what I'm really looking to see is a pattern 5, a sideways quiet channel. If price were to hold here and then move up and then go through that blue circle and leave the river, then what we would see is very clearly lower support, a higher support, a higher support, and that's a two-step lazy W. And now if it goes through the river here, then I certainly want to be long at 82.56. So I look at this as an opportunity to frame a low risk trade while it's still in the river, and I'm basing it on a lazy W with higher lows, and I can buy this now inside the river where it's failed to fail for almost 30 minutes, and I can buy it at 82.20. And now I can use a 40-cent stop. And now my logic is, at 40 cents, it will have fallen out of the floodplain, past 2 Bollinger Bands to the downside. It would have violated this support level on the previous adverse excursion, which was my lower support level. So I can now, instead of waiting for here and buying at 82.58 with an 80-cent stop, I can now try to capture that 40 cents if it wants to go here. But it's only 40-cent move down here, and if it goes through 81.20, then that's where I have to be short, not later than 81.80 at this point. and that's where I want to be short, because now I'm outside the floodplain, and it looks now like this would have rejected the far side of the river and failed at the Bollinger Band mean. And then what do we have on the other side? Yes, we have a regression line crossover outside the river that would have been successful, pulled back, found resistance at the Bollinger Band mean, and then failed. So that would actually be a pattern 2, resistance at the Bollinger Band mean after the RLCO. So that's sort of bread and butter. So I don't mind waiting for 81.80 to get short again on a Friday afternoon when the market was generally up. But I now see an opportunity to frame a low-risk trade here. Now I'm only 40 cents of failure to get me out of that trade. So I like that, and now I can capture maybe that 40 cents if it really wants to hold here. So that's the reason I would call this a critical state, that it's going to move from here at 82.20, where I'm buying it. It's either going to go back up and retest at 82.88, which gives me 60 cents on the upside, and then if it breaks through, it's off to the races, and it's going to be a run up all afternoon. But if it fails here, then I have plenty of room on the downside to capture. Well, what actually happened? This ended up being approximately a scratch. It came up and tested the far side of the river, which gave us a chance to get our stop moved from 81.80 up to no lose plus dinner for 2, and shortly thereafter we were scratched out for a minor win. And then after that failure, it came down and took out 81.80, and then in our usual way, since the market was then failing, we dial over to the inverse trades, and we compare VXX and TZA, VXX being the volatility ETF and TZA being the triple leveraged inverse Russell. And it turned out that VXX was working faster than the Russell, so we jumped on the volatility trade, and that looks like this one. We get a pattern 5 SQC. That's about as SQC as it can get right in here. And now with a 30-cent stop entering in the usual way at 42.60, it makes a run up out of the river, out of the floodplain, and gives us a 1, 2, 3 exit in the usual way, as we can see that RLCO beginning to form in the future. So we go ahead and take that one, and we capture 20 cents on a 30-cent risk for 0.6R. And now we have a successful RLCO pattern. In this case, it was an SQC, but it's the same thing. It now finds support here at the edge of the river and starts to take off again. And now, because I want to be into that trade before it breaks out above the top of this, I play my continuation pattern now at 42.85. So we ended up giving a nickel in order to save 20 cents on the downside, because we exited before at 42.80. So yeah, but now you bought it back at 42.85. Well, sure. What I was doing was protecting the 20 cents I had made here against a move back to the Bollinger Band mean. That's the expected move. But it didn't move the expected move. It held support at the edge of the river. I like that. That's pattern 3. Support at the far side of the river after a successful RLCO. We get the first entry at 42.85. It runs immediately north at 43.30. We've got just about 2R in hand plus momentum. So we go ahead and buy that at 43.30, the second position. We move our stop up within about 3 to 5 minutes and lock in a win at 43.36. So now I've got a couple R in hand on the first position. I got no lose and dinner for 2 on the second position. And then it turns out that this thing just really runs north, goes all the way to 42.70. And then we get a 1, 2, 3 exit on the downside. And then as we're getting close to the last half hour of the day, we just take it at 44.20. And then when the smoke clears, that second set of trades ends up pulling in 7R. So a normal trade, and I like the professional exit at 0.6R. I love the professional re-entry. I like the professional second entry and quickly move to no lose. And at that point, when we're in this position, we got almost 3R out of the combination of those trades, and the market is moving in our direction. Got the stop locked in, and now it's simply a question of how much the market wants to give us and that I can manage. And in this case, it turned out to be a good move. We don't deserve it, but good things can happen to bad people, and I'm willing to accept the gift, and I hold nothing overnight on this intraday trade. So that's the rlco2014 trade frame, where we're trying to front run the SQC pattern 5, and so we essentially are using that lazy W pattern 4 to frame a trade in both directions. There, it looks a little better. Again, that's the key point that I want to make, is that the critical state that we're framing here allows us an opportunity for a favorable reward to risk trade to the upside and to the downside. And even though I'm going long, I've looked at that trade through the other side and decided if and when and where I would stop and reverse. And then we ended up playing that, then found the best target to play that idea. It turned out to be VXX rather than TZA, but that's using our logic chain to find the moving target. So by trading that frame in both directions, we were lucky enough to be prepared to get a 2.5 or almost 3R initially, and then on the parabolic runaway move, well outside 3 standard deviations. Now, the astute among you will say, Ken, isn't that a Z trade? It absolutely is. What do we have here? Price has exceeded 3 standard deviations. You can short that right where I covered, with the intent of getting back towards the Bollinger Band mean, and there was more in that trade for the very flexible and the nimble. But to be honest, at 7R plus a little taste here and half an hour left, I was happy enough to let the gang fight that out on Friday afternoon. I need to have 4 things to make a trade: pattern, money, time, and the will. There was a pattern. I had the money from the 7R to invest into it. There was time left, half an hour. I simply didn't have the emotional will to make that trade. I was at such a level of contentment that I didn't have that necessary trading edge to make that trade. So I need pattern, money, time, and will. I was lacking the will. That's enough to not take that trade. So this is Ken Long from Tortoise Capital. Keep your powder dry and your risk measured. Have a great weekend.